Hey there, random internet strangers. It's Random Bitcoin Guy. Here is a general all-purpose guide to my dollar cost average beast mode strategy. If you're new to this, I'd like to welcome you and thank you. I don't ask for any money. I never will ask you for any money. All that I ask you to do is use the affiliate links that I provide to set up an account. If you're brand spanking new to the Bitcoin network, what I suggest is setting up a BlockFi account. They're not my favorite broker, but they are the easiest to get set up with and to get started on your dollar cost averaging journey. They don't have a lot of coins and but they have all the bells and whistles that you need to do this. And I developed this system because I wanted a way to be able to not exactly time the market. We're not looking to buy the tops and sell the bottoms. The point is that it's to accumulate Bitcoin, but we want to accumulate it at lower prices. And to do that, we do that by using calculated percentages to set aside money to buy the dips. And then but we're always dollar cost averaging in a small amount. And so what you need to do is you need to find an amount that's going to be okay for you, and it has to be consistent week after week after week. That's very important, that you can, whether it's $20 or whether it's $2,000. The key is to be consistent about the amount that it's not going to affect, that you're going to be able to pay your rent, your utilities, and your food and things like that. So this is just a savings account. That's the way you think of it, as a savings account. And you will always find my signals here at on Twitter at Random Bitcoin Guy, right here at the pinned tweet. I post them every Sunday afternoon, usually around between 5 and 6 p.m. Eastern Standard Time. That's New York time. And so let's get right to it, and I would like to explain a few things about it. So let's go right here. I got a few examples up here. We're going to go over each of these examples and how to do this. Now these examples, they could be for Bitcoin or Ethereum, and you could use the Ethereum ones for different ones like Binance Coin, but I don't recommend it. I don't. If you get too diversified, you might start going down the rabbit hole, and you'll find yourself in a world of trouble if you don't know what you're doing. I've been trading for 10 years, and I find Bitcoin very difficult to trade. But to dollar cost average in has been like a godsend to me. From the returns that I get from dollar cost averaging compared to the returns I was getting from trading are night and day. I've made 6 times the amount of money that I made, that I put in. I've gotten 6 times out so far, and I know that it's going to continue to grow and progress. And you are lucky if you're getting in as early as you are. And right now, actually, at this particular time, is a good time to start. But what my beast mode strategy allows you to do is it allows you to start anytime and make sure that you're not buying at a top and then losing 20, 30, 40, 50% of your value over a course of a couple weeks, because nobody wants to do that. And that's what this avoids doing. And what we do is we divide up our dollar cost average into 3 different buckets. Excuse me. We have our DCA bucket. That's how much of Bitcoin that we're going to purchase today. And just to simplify things, I'm just going to talk about Bitcoin, but I do also give signals out for Ethereum, but we're going to keep it real simple, and we're just going to talk about Bitcoin. So our DCA, that is the signal that tells us how much Bitcoin we're going to buy today with our dollar cost average. And I'm going to go through some examples here, but I want to go over the buckets first. By the BTFD, by the F and dip bucket, that is money that we are going to set aside to buy dips in price, so that every week it'll be a percentage of our dollar cost average is going to go into this bucket to purchase dips. These are small fluctuations in the market, relatively speaking, because we look at week by week basis. We're not staring at charts. We're not looking at the hourly chart or even the daily chart. I do sometimes. I'll post daily and 4-hour stuff of what I think is going to happen, but overall, this is designed to be a once a week thing, so that you don't have to be bothered with being glued to a chart every day. So that's what this is for. That's to buy those smaller fluctuations in price, so that we can grab when it's at a discount price. We can grab it at a cheap price. The all-in bucket, this bucket is for when we get crashes. Now, there's only been 4 in Bitcoin's 12-year history, so this bucket will get very full over time, and so that you will have a lot of dollars saved up in here, depending upon when you start. So but that's the key. Is this bucket is to buy dips in price. This is to buy crashes. You'll hear about the market crashes. When you hear about the stock market crash, Bitcoin is still somewhat correlated to the stock market. So you're going to have these crashes, and when these do occur, these are the opportunities to buy. I believe Warren Buffett says when there's blood in the streets, that's when you want to buy. When everybody's panic selling, that's when you want to buy. And so we want to save a little bit of money each and every week to buy in at when these prices crash. And these numbers are going to fluctuate depending on what price is doing. So that's what the 3 buckets are. We have our DCA bucket, our buy the dip bucket, and the all-in bucket. And we will segregate these into different accounts. If you use BlockFi, what I like to do is, for my buy the dip fund, I put that, I buy my Bitcoin and then the buy the dip fund, I'll put it in a stable coin called the USDC, and it's a stable cryptocurrency that is pegged to the dollar. It's worth $1, and it's backed by reserves, $5 reserves. Your dollar, your fiat dollar that you put into BlockFi, that's what backs that cryptocurrency. So it's 1-for-1, a currency that's backed up by. And then the all-in is a different stable coin called the Gemini US dollar, or GUSD, and we keep it in. That's what we get our money in when we put our fiat into BlockFi. We get GUSD dollars, and so that keeps it real simple, and it'll keep it segregated so we know which account is which when it's time to pull that money out. So let's go with our example here. This is a Bitcoin example. This is a typical bull trend example of what's going on. We have our dollar cost average of 63.7%. So we're going to pull up a calculator here, and dollar cost average 63.7%. So in our example, I like to use $100. So you have $100 every week after week, consistently, that you can set aside to purchase Bitcoin. And so 63.7% of that $100 is going to go and purchase Bitcoin with it today. So what you would do is you take your $100 times 63.7% equals $63.70. So that's how much money you would take and purchase Bitcoin. And if you use the BlockFi account, like I recommend, then you'll set that money, and that money is in Bitcoin, and it'll grow tax deferred. So it's very important that you don't want to be trading in and out of it. That's not what this strategy is about. This is about accumulating Bitcoin and lowering the average of your dollar cost average. This eliminates taxes and trading fees, so that you're not wasting a lot of money and then losses on top of it. and you're not using leverage and a lot of crazy other stupid stuff that you can get you into a lot of trouble. So just think of it as a savings account. So that's our $63.70. So let's move on to the next one. This is our buy the dip fund. Now, the buy the dip fund is money that we are going to set aside. This is going to be cash, and it's going to be put into a USD stable coin called USDC coin. And it's a cryptocurrency, but it's pegged to the dollar, back dollar per USDC coin. So it's just, you're just changing your paper money into cryptocurrency dollars. So it's the only difference. It's still the same dollars, just in a different form, if you think of it that way. And so the buy the dip fund is 28.3%. So we take our $100 times 28.3% equals $28.30. So that money is going to go into you're going to purchase USDC, and so it's going to stay in dollars. And the reason why I put it in BlockFi is that you can collect interest on this money while you're waiting, or while it's growing, and then it compounds and it grows and continues to grow. And the interest rate, I believe right now, is 7.5%. Try getting that at a bank. The banks are giving you like 0.1%, if that. 7.5%, and just for doing nothing, for keeping your money, saving your money. Like the good old days, the way it used to be back. I remember in the early 90s they had 5% money market accounts. You don't see that anymore. So that's what this is. So we're going to set aside that $28.3, and it's going to earn around 7.5% right now. It'll fluctuate depending on how much they lend out. And the all-in escrow. So let's get to that one. So the all-in escrow, now if you add these all together, it's going to be 100%. So the all-in escrow, that's another dollar fund that we're going to set money aside specifically to buy those crashes. And as I said, there's only been 4 in Bitcoin's lifetime of 12 years. So on average, that's about 2.5-3 years, right around there. So on average, that's where you are going to pull everything out in an all-in signal. But right now we're just putting money into it, and we'll get to those signals where we pull the money out of the buckets in a minute. So we'll take our $100 times 8% equals $8. So that $8, if you use your BlockFi account, that's going to stay in GUSD. That's the easiest way to do it. And then, so now you got everything segregated. You got your 3 buckets. You got your $63.70 worth of Bitcoin purchased today. Then you have your $28.30 of USDC that you're setting aside to buy dips when prices are low. And then your all-in is at 8%. That's to buy those crashes. And then these will build up over time. 28.3%, 30%, 40%, even 50-60% is possible where you're going to be putting this money aside, so that when the time comes to buy the dip, you're going to have a nice chunk of change. And that's what we're going to get to into the next example. So let's go to the buy the dip fund. Buy the dip example, where the buy the dip is negative. So we've been doing this for a while. But in our example, let's say we've been doing this for a couple months. Pretty good. So we got a pretty sizable buy the dip fund built up. $30 a week we're putting into that. And let's say over a few months' time, we could have hundreds, even thousands of dollars in this account to buy the dip. And so when that occurs, we get a buy the dip signal. This buy the dip number will be negative. And so what this means is when this number is positive, we're putting money into the bucket. When this number is negative, we're going to take money out of the bucket. We're going to take the percentage of whatever the signal tells us. So let's do our dollar cost average first. So we're going to buy Bitcoin today at we have our $100 that we're going to purchase today, and so we take our $100 times 96.3%. That equals $96.30. So out of our $100, we're taking almost all of it and buying Bitcoin with it. That's what it amounts to. Almost every bit of it. So we're going to set that aside now. Now the buy the dip is negative. That means we're going to take that money out of the account that we've been setting aside, all that USDC, all that money we've been setting aside, and it's also collected interest if you're using the BlockFi account. It's also collecting 7.5% interest. It gets paid out. It's earned daily and paid out monthly for BlockFi. So we have a negative 68.2%. Now, as I said, we've been putting money into this week after week after week after week, and then after several months, we might have as much as $1,000 in that account. So we'll take our $1,000. It's just an example, times 68.2%, and that equals $682. So we are taking all that money and we're going to buy Bitcoin with it today because we know that it's at a good price. It's at a really good price. Now you'll hear on Twitter, people will be buy the dip, be screaming buy the dip. If this doesn't tell you, don't worry too much about it, because this is designed to be a week long process, week after week, not a daily process, so that we're not glued to the charts on the daily charts. Sometimes we do miss out on these smaller dips, where if it was a buy the dip signal like on a Wednesday and then it popped back up on Thursday, Friday, that buy the dip signal probably would only been maybe a 10 or 20% max. We want to find these bigger dips on the weekend so that we get it at a deep discount, not just a regular little old discount. And and plus, this is designed for the working man, so you get paid every week or every 2 weeks or whatever, and so you're doing week after week after week. And so this allows us to discipline and put in this money on a savings account. So we have $682 that we're going to buy in Bitcoin today at a reduced price. So we didn't buy it up at the top. We bought it when it was down low. Okay? So we're going to set that aside. And then the all-in is 3.7. If we add these two together, then DCA and the all-in, that's 100%. So that's our $100. So we take our 100 times 3.7% equals $3.70. So that would go into your all-in bucket to wait for when those crashes do occur. Okay, we'll move on to the all-in signal. So what happens at an all-in signal? A random crypto guy, what are you talking about? Well, it's real simple. I will post all in. That will be the signal. Don't be anything fancy, no percentages, nothing. That means you are going to take everything that you have and purchase Bitcoin with it. Sell the farm, sell the kids into slavery, sell the furniture, buy Bitcoin, because it is at a deep discount price. You have to understand the laws of supply and demand dictate that if something is scarce, and that's what Bitcoin is, it's digital scarcity, and it has a cap. It has only 21 million will ever be made. It's not like gold where they can continue to pull it out of the ground or pull it from space. This is it's digital scarcity, and so it has, as long as there's a demand for it, as long as people want to use it, and demand is going to continue to grow, particularly because of remittances. That's going to be the next biggest thing over the next 3 to 5 years. These smaller countries are going to start adopting it to get the remittances so that they can get the money that the banks have been stealing from them for decades. So that's going to create more demand, and as a result of that, that's going to increase the value of your Bitcoin. Now, I'd say at times this will fluctuate, and the market's crashed, whether it's the stock market, and there's still some correlation between Bitcoin and the stock market and everything else. So, but when this all-in signal occurs, that's what you're going to do. Is you're just going to take everything that you have, your dollar cost average, your buy the dip fund, and your all-in fund, and purchase Bitcoin with it. I don't know what that is, but I don't have to take a calculator to find out what that is for you. So, but in case you do need one, when I do it, I X'd out the calculator. Let's bring it back. So let's say in our all-in fund we collected $5,000. So we're just going to buy $5,000 worth of Bitcoin with it. Oops, sorry, I didn't mean. And then our buy the dip fund, you're going to take 100% of that. So let's say you have $1,000 in your buy the dip fund. You're going to buy Bitcoin with that. And then your dollar cost average was $100. You're going to take $100. And you're going to buy Bitcoin with that. That's what the all-in signal. That's what the all-in signal is. And as I said, they don't occur. They're a very rare occurrence every 2 to 3 years on average. So that's something to keep in mind. One more thing. A couple more things, actually. Some people, they come into the market and they have a big chunk of change that they want. I want to buy Bitcoin with it. And usually they're coming into the market when the market's in a bull run, where things are going crazy. And that's like the worst time to buy it. You want to buy it when prices are suppressed so that you get it at a discount. Think about it this way. If you were going to go out and buy a refrigerator and you heard that the price of refrigerators was going up, would you go out and buy a refrigerator? If your price went from $500 to $1,000, would you run out and buy a refrigerator right away? No, you wouldn't. So don't think it's the same thing as happens with. You got to think the same way. It's a refrigerator. It's a commodity. It's something that you want to buy at a discounted price. So let's say you have $1,000. Maybe you have $10,000. Maybe you have $1 million. Doesn't matter. But you want to purchase Bitcoin with it. Instead of buying in when it's at an exorbitantly high price and then watch it devalue 20, 30, 40, 50% in a couple of weeks, you want to wait and purchase it at lower prices. So what my system allows you to do is that you can put that money in the buy the dip fund, the all-in fund, either one of those funds, or you can split it up in percentages. You can put it 50% in buy the dip fund and 50% in the all-in fund. So you have $1,000 that you want to purchase Bitcoin, but you're not sure when you want to buy it. But you want to buy it at a lower price. Put 50%, so it'd be $500 into the buy the dip fund and $500 in the all-in fund. That's up to you. I can't make that decision for you, but that's what I find is a lot of people, they come into this market, they don't know what they're doing, and that's what I try to do, is try to help you. And it's all about buying the dip. And once you take a sip, you buy the dip. As the saying goes. So, in review, we have our dollar cost average, our 3 buckets: dollar cost average, buy the dip, and all in. Dollar cost average is how much Bitcoin you're going to buy today. Buy the dip is the bucket that we put in. If you use BlockFi, you put this in the USDC bucket, and this is for buying the smaller dips in price, whether we're in a bull market or whether we're in a bear market. These smaller dips will occur, and that's when we can take that money and put it into Bitcoin. But in the meantime, we just set it aside, and then it collects interest on top of it if you use a BlockFi account. So that's kind of cool. And then the all-in, that is for buying crashes in a bear market. So the market just tanks and goes to complete shit. And we've been collecting, anywhere from 1% to 10% here and there, depending upon what price is doing. And then that allows us to accumulate, hundreds, even thousands, maybe even tens of thousands of dollars. So we have those dollars set aside and we're ready to buy the dip when that occurs. So we get it at a deep, deep, deep discount price, and then we just watch it soar and watch as the demand picks back up and continues to go up and onward as the demand will continue, particularly because of in these particular next 3 to 5 years, remittances and the Lightning Network is going to be huge, and the demand is going to just go through the roof. And then once we get an ETF in the United States, that's going to be another demand on Bitcoin to have people buy it and hold it. So that's our 3 buckets. And then remember, with our buy the dip bucket, if this number is positive, we're putting money into the bucket, filling the bucket up, positive. Okay. And then this one, if the buy the dip is negative, if this number is negative, that means we're taking the money out of the bucket. So it's negative, so we're taking money out. We're lowering the level of the bucket. We're pulling money out of the bucket. So that's why that number is negative. And that's the only one that does that, whether it's positive or negative. The all-in, when an all-in signal occurs, it's just all in. You're taking all your money and then some. You could even, I don't recommend it, but you could even go into debt, like what Michael Saylor does. But I don't recommend that for the average working Joe. If you can take a bigger risk on something like that, then that's a different story. My risk tolerance doesn't allow me to do that, but that's just something that you might consider in your risk profile if you choose to do that. So that's our 3. That's our, remember, positive and negative, and the all-in signal. So that's all I have for today. Let me close this out. And where was I? Where did I want to go? Oh, one more thing. Here we go. Going back to this is where you will find me, Random Bitcoin Guy, the pinned tweet every Sunday. I've changed it out. I put usually some pretty girls, not always, but usually pretty girls for some eye-catching material. And I'll have the signals here. The DCA for Bitcoin. This was last week's signal. This is not the current signal for the. You can always check for the date. Make sure that you have the proper date. And that's about it. I have to go online and actually post the signals for today now that this video is done, and this is just a generic video that I will be posting with the pinned tweets. So thanks for stopping by, and keep stacking sats.